Having trouble getting approved for a credit card because of a low or maybe even non-existent credit score? Well, you're not alone. For most people, credit's usually an afterthought. Until it's not. Building that initial credit score from scratch can be difficult and intimidating, but with these steps, you'll be well on your way to credit serenity. The first challenge most people face is getting approved for that initial card. AKA, it's difficult to build credit history if you don't have access to credit in the first place. It's similar to finding that first real job after graduating. You spend years in school, so companies will hire you. And then when you finish, nobody wants to hire you because you don't have any experience, because you were in school. But how do you get experience if you can't work? Ugh. So the question is, how do you get your foot in the door? Well, there are a couple of ways. The first is what I call the authorized user method. Find someone you know who already has a strong credit history, maybe a parent or an older sibling or a close friend, and ask them if they'd be willing to add you as an authorized user to their credit account. Sure, this requires a decent bit of trust, but it's fast track. An authorized user is someone who is added to an existing credit card account and can use the card, but ultimately, the account holder is responsible for the payment. When you become an authorized user, the card's history will appear on your credit report. So if the cardholder has used the card responsibly, then your credit score will reflect that. Think of it as having someone who works for a company that you want to work for vouch for you to help you get the job. If this isn't feasible, another option is to apply for a secured credit card. A secure card is backed by a cash deposit. You pay it up front, and in most cases, the deposit amount is used as your credit limit. You use it like a normal credit card, and every payment you make builds your credit history. Be aware though, if you ever miss a payment, you'll lose the deposit. In this instance, you're asking the company to let you work hourly on a trial basis. They get to control the risk, and you get the opportunity to prove yourself and gain valuable experience. Just make sure the card you apply for reports your credit activity to all 3 major credit bureaus. That's the whole point. So, you've managed to build enough credit history to get that initial card. You got the job! Congratulations! That's the hardest part. At this point, it's all about building trust. And what's the best way to do this? One word: consistency. Credit bureaus use several metrics to measure how reliable you are as a borrower. When these are all within their acceptable ranges, you are viewed as a responsible user and your credit score goes up. The 2 metrics you need to try and maximize are on-time payments and credit utilization ratio, in that order. Basically, do what you say you're going to do and don't overcommit. On-time payments is exactly what it sounds like. Do you pay your bills on time? At its core, credit is just borrowing money that you agree to pay back. So obviously, the most important consideration is how likely the borrower is to pay back that amount. On-time payment percentage is calculated by taking the total number of payment cycles and dividing it by the, you know what, just don't miss a payment. Try and keep this number at 100%. If you're going to take on credit, you should always pay back what you borrow. It's just the right thing to do. Next up, and second most important behind on-time payments, is your credit utilization ratio. Credit utilization is the portion of your credit limit being used at any given time. A good guideline is to keep this below 30%. People with the highest credit score use less than 7%. Just quickly, so you can understand how this number is calculated, say you have a credit limit of $2,000. If your outstanding balance is $500, then you have a credit utilization ratio of 25%, as $500 is 25% of $2,000. Finally, you've had the job for a bit, you've started to build a record of consistency. What's next? In my opinion, this is a good time to ask for a raise, or in this case, a higher credit limit. After you've proven yourself over the course of several months, you probably won't have a hard time getting approved for a bump in your overall limit. In most cases, you can simply log into the card's corresponding mobile app or website and choose an option along the lines of apply for a higher credit limit. You'll usually get an answer within minutes. The great thing about higher credit limits is while it goes up, everything else stays the same, meaning that your credit utilization ratio will go down and in turn your overall score will go up. Win, 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 win. Well, that feels like enough for one episode. There are plenty of great credit resources available if you'd like to learn more, but hopefully these steps are enough for you to get a solid footing. If you enjoyed the video, please consider subscribing or giving us a thumbs up. For more, be sure to check out Dollar Bells on YouTube, Facebook, TikTok, and Instagram. Until next time, I'm Betsy, and thanks for watching the Dollar Bells.